Good morning, everybody. It's Thursday, May 30th, 5:27 a.m. Central Time. Grain markets are lower this morning. July corn futures down 1.5 at 453 and 3/4. July soybeans down 1 at 12.13. July Chicago wheat down 12.5 at 680 and a quarter. July Kansas City wheat down 12 and 3/4 at 707. July spring wheat down 8.5 at 743 and a half. We do have a wheat story to start off today.
India is slated to begin importing wheat for the first time in 6 years. The country is expected to scrap its 40% tax on wheat imports at the end of June. The move will allow private traders and flour millers to begin purchasing wheat from global suppliers such as Russia. Hot and dry weather has caused India's wheat reserves to fall to their lowest level in 16 years. Reserves are also depleted due to India's government being forced to sell wheat stocks to keep domestic prices from rising. There is potential that India could import between 3 million metric tons and 5 million metric tons of wheat. The tax on wheat imports is expected to be reinstated before harvest begins in October to protect India's farmers.
India is the second largest wheat consumer globally, behind only China. So they use a ton of wheat. They just don't import wheat very often. The 16-17 marketing year, they imported almost 6 million metric tons. And the 2006-2007 marketing year, they imported 7 million almost. But aside from that, it's non-material amounts almost every year. USDA, to this point, is projecting that India will import essentially zero wheat this year. And now you've got analysts out of India and elsewhere saying that it could be 3 to 5 million metric tons. There's a big difference between 0 and 3 to 5 million metric tons. Look at this one. This is top wheat exporters, Russia. USDA says that Russia is going to export 52 million metric tons, whereas the private groups, ICAR, most recently estimated that number at 44 million metric tons. So do some math here. If India wheat imports are 4 million, let's say they're 4 million, we'll split the difference between 3 and 5, and Russian exports are really 44 and not 52. Combine those and you've got a 12 million metric ton swing on the balance sheet from like what USDA is projecting and what could be reality according to some of the private groups. USDA really hasn't acknowledged on paper to this point any of this. They haven't acknowledged the drought and frost damage in Russia. They haven't acknowledged at all that India is going to import a material amount of wheat. And this is a lesson in one thing, and it's this: USDA and their data. It's not the only thing that drives price action. The trade does not wait around for USDA to confirm or tell you this sort of stuff. There's a reason that the wheat market rallied $1.50 per bushel or whatever it is, and it has absolutely nothing to do with what USDA has written in their government reports. It has everything to do with weather forecasts, private projections, stuff like this India story. USDA may come around and may ultimately lower some of these numbers, but the market hasn't waited. So I know there's a lot of USDA haters out there, and I'm one of them to some extent when it comes to some things. But USDA is not the only driver of prices. So we may, when it comes to wheat, we may be moving toward like a situation that we've got like with Brazil, where it's USDA versus CONAB, and there's just this big disparity and it's not changing. You could see the same thing in wheat, but make no mistake, guys, the markets can rally without USDA giving you the go ahead. Like the markets react in real time, where USDA always kind of lags. That's the way it works.
Rain will return to the U.S. plains and western Corn Belt today. Storm systems are slated to be active through the weekend. Areas that are likely to see the widest coverage include Kansas, Missouri, Oklahoma, Arkansas, Texas, and the Gulf Coast. Large areas of Texas, Oklahoma, and Kansas may see severe thunderstorms. Flash flood warnings are in effect. Corn Belt rainfall is likely to be heavier during the 5 to 10 day period. Widespread coverage of 1 to 3 inches is expected across the region.
So first off, you look at some of this extreme weather. A lot of this is across HRW wheat country in the United States. And I think that for a lot of the crop, this is probably too late, these rains. But if you guys know otherwise, if you think that these rains are going to be helpful, drop me something in the YouTube comments. But kind of what I've heard is, a lot of this is going to be too late. You look at that 5 to 10 day period in particular, and you got a lot of rain that comes back into the Corn Belt. Illinois, Indiana, Ohio, Missouri is going to catch some rain here in this system here the next 3 days, the way that it looks. I can't help but wonder how the market or how the trade is looking at this. Is rain now a bearish item and a good thing for crop production, given that we're talking the month of June now? I mean, typically it would be. And I know that that's maybe a tough pill to swallow if you've still got corn to plant, or you've been excessively wet, or if you're in one of these areas that caught 10 inches of rain over the last 2 weeks, yeah, maybe the rain is not ideal, but I can't help but wonder how the trade is going to handle this because typically, I mean, in a normal year, it starts raining in June and that's considered a bearish item. I don't know if that's how the market is eyeing this right now or not, but that's the deal.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's video with Matt Bennett?
Matt was on yesterday and we did a mailbag video. So I told everybody that subscribes, I said, hey, Matt's going to be on. We're doing a mailbag. Send us over your questions. And we had a lot of great stuff come in, questions about, yield possibilities. What do lower yields do to the balance sheets? One of the things we discussed is everybody too bearish? And what does that mean? I read a lot of stuff and I see a lot of stuff, and I haven't seen anybody that's overly bullish the market. As a matter of fact, even the people, analysts, traders, whoever, even those who are bullish are only bullish the corn market to the tune of like 20 cents. And the attitude seems to be these corn gets above $5, 5.10, 5.20, you better be selling the damn thing, right? And I've seen this before where the crowd is kind of tilted in one direction. And when that happens, things can get crazy sometimes. There's not a prediction of what's going to happen or any sort of prediction by me, but this was like a 40-minute video with Matt. It's the premium stuff's uncut. There's no commercials. It's just straight market talk. This one was 40 minutes long. If you guys want to see the premium stuff, and you're going to want to be on the email list this summer, guys, when Pete does these pre-open weather updates. And it's not just a weather update. The idea here is that Pete's going to take the weather and say, I think this means this for the markets. This is why we don't have a meteorologist do it. This is why we have Pete do it, because Pete's able to look at the maps, but also understands how the markets work. So you're going to want to be on the email list for that. Go to standardgrain.com, sign up this morning. This is a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. As I've said in the past, we don't want to do your brokerage. We don't want your consulting business. There's no per acre fee. There's nothing like that. We just want to sell you a $50 per month newsletter. That's it. Check it out today, guys.
On Monday, China suspended beef imports from the JBS plant down in Greeley, Colorado. The beef exports from the plant were halted due to traces of ractopamine found in beef bound for China. As one would expect, the news caused the cattle futures to plummet. Ractopamine is fed to fat cattle approximately 40 days before slaughter to add lean muscle. In the U.S., meat from animals fed ractopamine is permitted for human consumption. However, in at least 160 other countries, it is either restricted or banned. Last year, China was the third largest importer of U.S. beef with $1.6 billion in imports. To put that in perspective, the U.S. exported about $10 billion worth of beef in 2023. Also last year, according to JBS, the company's beef exports accounted for 20 to 30% of China's total beef imports. JBS is currently working with Chinese and U.S. authorities to resolve the issue. One more thing to note, the JBS plant down in Greeley processes about 5,400 head of cattle on a daily basis, making it one of the largest plants in the U.S.
Cattle market got absolutely hammered yesterday. Was it an overreaction?
I would say so. This actually happened on Monday, and the news of it just came out yesterday. This was just traces in some beef bound for China. They will get this resolved. It was just an overcorrection, and in my opinion, it was just another reason to slow the cattle market down. A lot of people might disagree with me on that, but things were getting pretty hot, and hopefully things bounce back today because they took everything away that we had gained in recent days.
Let's take a look at this. This is how demand for U.S. beef and veal, this is how USDA categorizes it. This is how it looks. And we don't export a ton of beef relative to domestic consumption. And of what we do export, I mean, how much of that goes to China? I don't know what the exact percentage is, but you're talking a really small percentage of demand overall. So my thought, being kind of an outsider when it comes to cattle, is that this is an overreaction in a thinly traded market. Is this a deal that's going to change the trajectory of the cattle market permanently or for the next 6 months? My answer would be no.
Yeah, I wouldn't think so.
Could it be another 2 or 3 days? Yeah, sure.
Yeah, it definitely could spill in maybe to like next Monday or Tuesday, but this will get resolved and hopefully we get back on track.
All right, what do we got next?
So, the U.S. is considering allowing Ukraine to use American supplied weapons to attack targets within Russia. On Wednesday, U.S. Secretary of State Antony Blinken hinted that the White House, is contemplating the policy change. The U.S. has supplied weapons to Ukraine with the stipulation that they would not be used to attack targets within Russian territory. The constraint was put in place to avoid potential military escalation between the U.S. and Russia. European officials recently stated that they support granting Ukraine permission to use weapons supplied by the West within Russia. On Tuesday, Vladimir Putin responded and said that the use of Western provided weapons to attack Russia could result in retaliation.
I don't have anything to say about this other than I had to throw this slide in again. We had this in the premium video. Yeah. This is U.S. Secretary of State Antony Blinken playing guitar at a bar in Ukraine like 3 weeks ago. And how serious is this war now? I don't, what the fuck is he doing? I mean, he's playing, he's like partying in Ukraine, and this is supposed to be like this war-torn country. He's in Kiev. I mean, I don't know. Yeah. As I said in the premium video, this is offensive to me as a taxpayer and also as a former professional guitar player because he can't play. Whatever.
Yeah, it should be offensive to everyone.
It's offensive.
U.S. stocks declined on Wednesday due to a slide in bonds and further gains in Treasury yields. A weak sale of Treasuries caused the 10-year U.S. Treasury yield to hit a 4-week high at 4.6%. Stocks were also pressured due to mounting concerns over the Federal Reserve cutting interest rates. The Dow Jones lost almost 1.1%, the S&P declined 0.7%, and the Nasdaq fell 0.6%. On Tuesday, Minneapolis Fed President Neil Kashkari stated that the Fed is likely to keep rates elevated for an extended period of time while they wait for inflation to decline. However, he also said that if inflation doesn't resume its downward trend, a rate hike may be necessary.
My feelings toward Kashkari I can't even, the words that I would use to describe him can't be said. I hate this guy so much. These guys all need to shut up. These Fed heads are like on an ego trip, and they know that they can move markets, so they talk a lot. They think they're big and powerful and important when in reality they're destroying the country. But that's a different topic for a different day. Treasury yields have, we were in a 40-year bear market in yields and in interest rates, and it looks like it's turned. I mean, you show this to a chart person, and they're going to say, yeah, that chart is bottomed, and you're in for a big recovery, and your bias is going to be to the upside. Now, that doesn't necessarily jive with what a lot of people are saying about rates. There's going to be these cuts. I don't really know. The stock market, yeah, has it corrected? Sure, but it's up 10.5% year to date. It's up 140% from the COVID low. If it corrects a little bit, I mean, that wouldn't be abnormal to me. That would be just kind of a run-of-the-mill deal. If you correct below like 4,700, then yeah, maybe things start to look a little bit different. But as long as you stay in this channel, and that's just one standard deviation on a weekly chart, if you guys are chart people, it's just, we're in an uptrend for sure. So cattle got beat up yesterday. What did prices do?
Definitely. Feeders were an average of $3.15 lower. Live cattle were an average of $1.65 lower. Box beef was mostly higher. Choice ended the day at $313.62. That was up $1.50. Select ended the day at $302.48. That was down 95 cents.
U.S. dollar's down a little bit. The S&P's down 21, kind of in corrective territory again. The Dow's down 330. Bonds are up a little bit. Crude oil is down 36 cents, and the July WTI at 78.88. Have a great day, guys. We'll talk to you Friday.